Welcome to Beanstalk, M&J's podcast where we are sharing and showcasing our areas of expertise through conversations with practice leaders on their knowledge and experience. As we've discussed in previous episodes, the world of tax is complicated. We have federal tax laws, state and local tax laws, regulatory bodies like the IRS and their interpretations of those tax laws, tax returns and forms and all the instructions that come along with it. And not only is this a complicated and challenging area, but it also changes. There are changes to those laws, evolving interpretations, and that's not even to speak to the technologies driving a lot of the tax world. And so because of that, we have a national tax practice at Mauldin Jenkins who works to stay up to date on that complicated world of tax law, tax regulation, and also monitors the changes in it to help us understand those laws, navigate them, interpret them, and importantly, assist our clients with strategies for them. When it comes to that national tax practice, I'm really excited to be joined by the leader of that group today, Brent Ulrich.
It's good to be here.
Hey, Brent. So yeah, Brent, thank you so much for joining for this episode. I'm really excited to dive into the complicated world of tax with you. And before we get too deep, we'll just do a favor for our listeners and kind of tell us about your experience and your role at Mauldin Jenkins.
Yeah, well, I mean, you kind of hit it on the head, right? So we've got all sorts of tax things to digest. And, you know, our clients have business problems. They don't just have tax problems. So, you know, we're tasked with, hey, well, what tax implications are part of your business process? And, you know, all the partners and their clients, I mean, they can't digest all that themselves. Like no one person can go and know everything about a client's business tax issues. So, you know, our department, our office is charged with, you know, digesting that, right? And you mentioned AI and we'll get your technology and we'll get into that, right? But it really is, hey, in a landscape that's changing so frequently, how do you stay on top of the opportunities for your clients, for the pitfalls for your clients? And that's what we do. You know, we're using our firm data, our client data in-house to make sure that we understand their position, understand what opportunities are, you know, present themselves based on law changes, right? Federal, state, international, all of it.
And I love how you put that, is it's not just we're navigating tax challenges. We're navigating business challenges. The tax is just kind of the subject matter we're considering from the frame of a business challenge, a business strategy, business goals. How does tax play into that?
Right. And then you've probably heard the phrase like, we don't want the tax tail wagging the dog, right? So it's a consideration. It's usually never a reason you're doing something, but understanding a client's problem, his business problem, and weighing in on, well, we can do it this way, X, Y, or Z. It just helps them kind of frame, hey, from a cash flow perspective, this may be better. From an operations, like there are opportunities out there in the tax code that help you operate more efficiently tax-wise that just align with your business structure.
So like one thing I'm interested in is just generally speaking, like how to navigate changes to taxes. And because we have this recent example, I'm curious, just like a use case, a very recent use case, kind of case studies, like what did change with this most recent tax? No, not too much of a deep dive or anything, just kind of the broad strokes. What were some of the things that really changed?
Yeah, I mean, there were 3 or 4 really big changes, right? And you know, the individual cuts were great, and we had the tips credit, and you know, and all that, but you know, I think the 4 biggest business provisions that will impact, you know, a lot of people are 100% bonus depreciation, meaning we can expense our assets, our tangible equipment, property, whatnot. So, you know, that helps people, you know, ensure their investment and their cost recovery in that investment very quickly. You know, the interest expense limitations, much more taxpayer favorable, kind of reverted back to pre-22 calculations, meaning, hey, we can just, based on the calculation, we can deduct more interest, right? Provided more, and those are permanent. Right. And as well as the QBI deduction, which is the pass-through deduction for small businesses. So all 3 of those made permanent. And then there was 174, which was R&D, you know, expenses, We used to have to capitalize those for the past couple of years, reverted back to being able to expense them. And even for smaller businesses, actually kind of go back and expense them for prior years, right? So very taxpayer-friendly provisions in general for business, encouraging a lot of, domestic investment.
Well, and I can see that these would lead to a lot of opportunities. I always like to think in terms of not just keeping up with the compliance and doing things how they should be done, but seeking out how to kind of get an advantage out of a changing environment. So kind of talk me through, like, how can we apply some of these things like you just described to actually help us from our business plans perspective?
Yeah, well, I mean, all these things are cash flow, important, right? If I buy an asset, I want to know what's my tax benefit of that, right? If I am investing in a 5-year, 3-year R&D project, well, now all of a sudden the cost recovery of that, it becomes more beneficial and, impacts cash flow for this year, right? I mean, now I have the certainty of these deductions. I know that I can, basically reduce my taxes that I expected to pay before this bill passed. So, provides a little bit more of, an expected understanding of going forward, environment.
Can you do me a favor and just kind of help me see the environment? Like, what really are we navigating here from a perspective? So like when I say tax law, what does that really mean?
Well, it's a perfect opportunity right now because we're just at a point where we've passed a pretty sweeping tax legislative bill. And we kind of get in the history of that, right? I mean, we didn't usually have these sweeping changes every 8-10 years, right? But it's really accelerated in the last, 20 years or so, where you've got, and we'll get into how laws are made, right? And how they're being done now. But it really is, hey, you've kind of got these windows now of, I've got maybe 4 or 8 years of certainty under the tax law. It may change. If a regime change in Washington, happens, then we may have a tax law change, right? And so just navigating those little windows has become, you just have to have more conversations with your client, right? Are we structured right now based on what we know now, right? And well, what are we hearing? Like what things are going to be on the horizon that may impact our assumptions right now? And the now passing of the law has provided a little more certainty. We weren't sure about that certainty. There was a lot of back and forth in the House and the Senate. What things are going to be temporary? What things are going to be permanent? And we got a lot of permanency out of it, which is a good thing. And so that's kind of helped us frame our conversations, right? Of okay, well now we know what these things are. Let's plan around that, and hopefully not have to plan through that regime change uncertainty so much more.
Right, because again, we're solving business problems, not just tax problems. And so we want to look ahead, plan, develop our strategies. And that can be hard to do if you think it might change in another 4, 8, however many years. So kind of tell me a little more about that permanent concept. What do you mean by that?
Well, kind of take a step back historically, right? I mean, we didn't see very significant tax law change from 1986, which was kind of the big sweeping change, until really 2017. I mean, there were some little tax cuts here and there in 2003, 2012, but 2017 was just kind of, hey, we're making changes, right? And we're doing it in a way where now we've opened the door for not bipartisan support, right? We can do it through a thing called budget reconciliation, which is effectively, hey, I don't need the other side of the aisle to make sweeping changes in the tax code. And I mean, other parts of law, right? But, sweeping changes just generally, I can do it through this process. I can do it, according to, Republican, Democrat, whatever. And there's generally certain windows to do it in, right? You can't make things permanent under budget reconciliation that, you could make permanent under, bipartisan support. So, 2017, the Tax Cuts and Jobs Act was, a pretty taxpayer-friendly provisions in that bill, and everybody, knew that those were going to sunset, in 8 years. 2022 is a similar example, right? I mean, we had the Inflation Reduction Act that was on the other side of the aisle. The Democrats, kind of passed that without Republican support. And now we're back over to the, Republican side, and we've repealed a lot of the Inflation Reduction Act. We've extended a lot of the provisions that was passed in the, Tax Cuts and Jobs Act. And so there is some permanency that was not felt in the 2017 bill that is here now that I think everybody's excited about, just, hey, we've got a little bit more certainty.
Some certainty.
Yeah.
Right.
And so that I think that's helpful for taxpayers, helpful for us, helpful for clients, most importantly, right? I mean, it is just, hey, we know the playing field for the foreseeable future. Unless something crazy happens, we know what assumptions to make, right?
Well, and as a business leader, kind of looking at this as an area where I just need to stay on top of it enough to make sure my business plans are good. I want to make sure I'm approaching this from the perspective of just really understanding the tax environment, thinking about strategies to navigate that environment successfully. But since this did happen recently, can you just kind of tell me about some of the changes that occurred, just as like an example of when there are changes to the tax law, like the kind of things that we have to navigate?
Yeah. And I would say the last couple of weeks of June, first week of July, were very active, right? You could sense bits and pieces of what was going to happen. The House and the Senate were misaligned on some provisions, mostly related to timing. Do I make things temporary? Do I make things permanent? But you knew in a general sense, hey, individual tax rates were going to remain low relative to their 2017 rates. We were going to have some, R&D deductions that we didn't have for the last couple of years. We're going to have some interest expense, so you could pick up bits and pieces before the bill passed. Now that it's passed, we've got, mostly taxpayer favorable provisions, right? I mean, I mentioned that on the individual side, you've got interest rate or tax rate cuts, increases to the standard exemption. You've got the TIPS credit or the TIPS deduction, the overtime deduction, the auto loan interest deduction. So, I mean, all the kind of campaign promises that were made came to fruition in some form or fashion.
And Brent, when it comes to the things you're describing, like those have real implications. Those are things that impact my business, impact my plan. So I'm kind of curious, even just kind of reliving this past year, we discussed, like the campaigns and the promises and the ideas early on into when people are actually in their seats, in Congress, in the White House, continuing the conversations and going public with them a little bit, and then kind of leading up to a potential passage of the bill and maybe final hour changes. I guess, like, when does the planning start? Like, I know now we have hindsight of what actually came to be, and you're describing that. I'm going to circle back to a couple of those. You piqued my interest. But even before we dive into details, like, when does planning start in this whole process?
Yeah, it's a good question because it's, you don't want to go too early because that's probably time wasted in terms of, hey, we're not sure on something, right? I mean, hey, this is out there. It's a possibility. There were a couple of possibilities, in the House versus Senate bill that were, frankly, a little scary and fortunately got dismissed, right? So there is too early, I mean, but now's the time. When you're closer at passage, that's when you reach out to your advisor, or your advisor should be reaching out to you like, hey, these are impactful to you, right? And that's our job too, right? Is hey, we know what's impactful to you. We are measuring that impact and, on your cash flow, on your business, on your structure. And then there are a couple of other provisions that may lead to those structural discussions, right?
So it's paying attention to the conversation, paying attention to what's being discussed and thought about, and then just being prepared for, okay, this is the final language. This is what's in there now. We've been thinking about this stuff, and now we know it's go time. Let's act.
Yeah, and really it's paying attention after too, because since the bill's been passed, you've got little bits and pieces of, well, you might have a senator saying, I didn't know what was in the bill. Let's maybe even rescind a portion of it, or let's add on. So there are even opportunities or not opportunities, but things to monitor, right? Of, hey, this might actually help you later, right? They may try and push out another reconciliation bill in a couple of months. So it's ongoing, right? It takes forever.
And now that we have that a little bit more clarity, maybe still some things to think about, keep an eye on and monitor. But just generally, now that the clarity is largely here, what are some of the best opportunities you see? In terms of, I know you're talking about things like the R&D changes, what that could mean. Like what are some things just for business leaders really have on mind of, And what's the time frame? Like, is this a neat new 4-year strategy, 8-year strategy, longer term strategy? And then how can we maybe start to really incorporate some of these changes into what we're doing as our enterprises?
Yeah, I mean, and there were 4 or 5 like really big important things that were all really pretty much made permanent, right? I mean, R&D, you mentioned. The ability to deduct research and experimental, deductions immediately versus having to capitalize and cost recover them over a period of time.
Yeah, let's pause there for a minute, because I feel like that was one that's been changing a bit. I feel like for a while we were capitalizing it and expending over time, but then there was a credit available, and sometimes what has been the process for R&D, and where are we now?
We're at a point where we are, if we're investing in domestic R&D, that we know we're getting an immediate deduction for that. Before the bill was passed, we were at a point where we couldn't get that deduction, right? We had to take that deduction over 5 years for domestic expenses and 15 over foreign, right? So we've created an environment where we're encouraging more, obviously, domestic investment in R&D by allowing you an immediate deduction. And with that comes the R&D credit, right, under 401. And they're brother, sister. They're not exactly, maybe brother, sister-in-law, not exactly related. And just because you have 174 expenses doesn't mean you get an R&D credit. But generally, you're going to find, hey, I've got domestic research expenses. I'm going to get a deduction and also a credit to a degree, depending on the nature of those expenses. So it's provided a lot of certainty for domestic R&D. Foreign R&D, there's still not a lot of encouragement, right, to go out and do that, because you don't get the immediate deduction. You don't get a credit for it, and so it's just not as friendly, not as taxpayer friendly.
So, what are some other strats we can start to incorporate based off of the changes?
Well, I think one of my favorite provisions that really wasn't on anybody's radar, it has to do with, it's called 1202 stock, and we had these conversations in 2017. I think 1202 really took off on people's radar back then, where it's this concept of, I own a corporation. If I hold it for 5 years and I do all the right things, simplifying it a little bit, but I hold a corporation that's doing the right business for 5 years and I sell that stock of that corporation, well, I don't have to pay tax on the gain, right? And that's a pretty powerful provision. I mean, you don't see a lot of just gain elimination provisions in the code. And the new bill actually expanded on that code section, right? So, now you don't have to hold it for 5 years. You can hold it for 3 and get a portion of the benefits, right? Now your company doesn't have to be as small when you're issued that stock. And so, you might see people in the, $50 to $75 million range from, relative to their value, start to take advantage of this new provision. And when I said we had these conversations back in 2017, right? I mean, couple the 1202 stock with the reduced corporate rate, you've created a situation where, depending on your goals, right, it may be much more valuably structured as a corporation versus a pass-through entity that gets the QBI deduction, which was also extended, right? But there's at least a conversation to be had, right? Of, hey, what are your goals? Are you trying to exit this thing in 3, 5, 7 years? What kind of cash flow are you expecting out of this business? Are you reinvesting back into the company to build it and grow it? Well, you might not want to be a flow-through entity. You might want to be a corporation because your cost of capital is a little lower because your tax rate's lower, right? So those are the conversations we want to have with clients of, hey, this provision's powerful. You may be structured right for your situation, but we just want to make sure, right? We want to make sure we're providing the best advice we can. And I think those conversations are going to be the most fun. The 1202 versus pass through. Let's make sure you understand your options.
And so it sounds like you can almost, it's a powerful benefit that, being able to waive that gain, it sounds like, so you can kind of prorate it earlier.
Yeah, that's right.
Interesting. Yeah, that's really cool. Mm-hmm. So it's obvious that there are a lot of opportunities to continue strategizing, to continue really assessing, understanding the landscape, and make sure that even when it comes to something like the structure of our business, thinking about even that level, and then R&D and opportunities there. But just talking about innovation, research and development, and my effort on these podcast series is always try and discuss relevancy, and just how that's the question we should always be asking ourselves is, are we relevant? One thing that I really like about your practice group is just your leveraging of technology. Mm-hmm. Just, not only is the tax environment changing regularly or, significantly at periods of time.
Yeah, daily.
Yeah, it seems. But definitely the technology landscape is changing rapidly, and how you're kind of using a lot of those kind of generative AI tools to assist with research functions. Can you kind of talk me through what that looks like?
Yeah, generative AI for sure is helpful in the research, but I mean, expand. I think I alluded to it at the very beginning. It's more about it's data, right? I mean, we have a good, clean data system inside, and so that helps us interpret what is impactful to our clients. And, I think that's the most important thing going forward. If you're a firm that's not really leveraging your data at the end of the day, you're going to fall behind. And that's, I think that's how we are most helpful, right? Is, hey, we know your situation, and that data is going to help. And we're working to collect even more data points, right? So it's the more data we have, the more valuable we're going to be. AI and ChatGPT, that's all going to be part of the journey. Right?
Well, and I think those are important points. This is not just so much as like there's this new technology on the block and it just solves the answers. It's structuring the entire environment correctly. Like you said, making sure that we're analyzing the right data in the right format, in the right way, and importantly, having good governance policies around the data, which I know is a really important aspect of your group. But then it's also how are we using, driving, steering that? Because that's, it always makes me think of, I'm a big chess fan. I love losing a game of chess. And back when chess engines started getting more and more powerful and it became like this battle of the human versus the machine. But very quickly we all realized that it's really when you pair a grandmaster with a strong engine that the real magic happens. Yeah. It's that partnership of the technology and the person that really shines a light. And that's exactly how you're navigating it, right?
Yeah, I think you hit on it. I think it's the partnership. Yeah. It's not, hey, AI is going to replace me as a research function or an advisor function. It's we are going to be so good together. And, to kind of use, ChatGPT as an example, we don't put questions in ChatGPT. We don't put client information in ChatGPT. But I'd be lying if I didn't say I put a tax question in there, right? Just to see what it spit out. And some of the times spit out's a pretty good answer, right? And so, but some of the times it just lies, right? It makes up a fake, revenue procedure or revenue ruling, and you kind of have to steer it back to no. Let's actually get to the right answer. And so, to the going back to the partnership thing, right? I mean, your client is probably going to be using these tools, but our job as an advisor, I think in the future, right, is you're almost translating what the situation really is, what the desired goals are. And, kind of guiding AI along with your experience to the right answer. And I think, that chess analogy is great. Right? It's the perfect situation where I have the experience. This has an enormous background of information. We are going to be very useful together, and I think the client will benefit.
Well, do you find value in just a client going out and trying out those tools and maybe just giving a first pass of a tax question to just like the public-facing ChatGPT?
I would say that ChatGPT is very taxpayer favorable. So I certainly would Google or ChatGPT a tax answer if I didn't know the question, if I'm a client, right? Just to see what my baseline is. And, I think it's harmless to ask your advisor, compare and contrast, right? But just you're asking of a tax question may not be your actual tax situation, right? So I think that's the disconnect of, ask it a question. It might give you a great answer. It might give you references that don't exist. So, and we're struggling with that internally, right? I mean, it is, we know it's a tool of the future. We know we have to kind of educate it, but we're going to use it. I mean, that's going to happen.
Yeah, you could do that. You can do it like that.
Yeah,
that's right. We'll get you the biggest refund you've ever seen, ChatGPT.
That's right.
That's right. So probably it's kind of like those medical websites then, where it's useful to kind of go out and get some context, some initial research, but then when you meet with your doctor, like probably listen to the professional.
Yeah, generally.
Okay.
Yeah.
Awesome. Well, what else is going on in the environment? Just when it comes to the world of tax and the technologies and the regulations and the laws, just is there anything else interesting happening that you've been keeping track of?
I mean, we're really paying attention to what's going on with the IRS. Obviously, kind of, pretty significant headcount reductions there. Some of the funding got pulled back for them. So, but, I would say they're obviously at the same time going to invest heavy in technology, right? So, I think it's our job to make sure we kind of mirror that investment and understand from a client perspective, what that needs to look like in the future, right? Because the audit of the future does not look like an audit now. I think it's going to be very much more technology data driven. And also just from an IRS, hey, taxpayer help perspective, right? What does that look like in the future? I mean, and so I think, working on those problems and making sure our clients understand, are not our data pain points, but pain points that might become an issue when they're paired up with IRS data pain points in the future.
So Brent, when you're talking about the IRS making investments in technologies and kind of even evolving the audit process, are you thinking when it comes to analytics and stuff that as soon as we file a return that they're going to be doing more of that kind of stuff? Or
yeah, that's exactly right. So I think, and they're doing that to a degree now, right? So there are certain, I'm sure, analytical points that the IRS, looks at, and that's how they're going to audit things, and probably more so in the future, right? You see the blips against certain other clients of similar types, similar sizes, and those are the outliers. So they're going to ask the questions, and our job on our end is to kind of ask those same questions, like why are there outliers? It could be a good thing, right? I mean, we could have credits that we've applied for that other people forgot about, and so it's kind of managing and viewing those outliers, having explanations for them. Because, I think in the future, you're going to look at, it's going to be more exact. What the IRS is auditing might not be your whole tax return, might just be this line item that they don't understand, right?
That makes me think of, I had an episode with Elisa Howell about the nonprofit environment. And we talked about different watchdog organizations that are kind of taking on a lot of the nonprofit public data and routing it through all these metrics and analytics and whatnot. And something Elisa and I discussed was, not managing to those metrics, but being able to explain them. Mm-hmm. You were kind of almost describing a similar situation with these. Is it's not like managing to avoid the red flags and going through this process in order to just prevent them from happening, but just knowing they might happen. We want to be aware of those, and let's understand why to make it a smoother process.
Well, it helps with our analysis process too, right? I mean, if we have established a baseline for your industry or your size or your structure, now we know, what the IRS is looking at. We know what we need to be looking for, and you plan from there. So I think that's the benefit.
And with their investments in technology, I wonder if it'd be a matter of time where it's our AI talking to their AI, the client's AI with our prepared.
I think that is not too far in the future, which is ridiculous.
But it'll be that partnership, the AI with the people driving it.
That's right.
Well, Brent, this was a great conversation. I really appreciate you joining me for the episode. And for everybody who listened in, thank you. If you have any follow-up questions about what we discussed today or any other business challenges you're navigating, please don't hesitate to reach out to us at www.mjcpa.com.